BG Trading. Hope you are well. Today is August 1st already, 2023, and I'll be talking about the RBA leaving interest rates on hold at 4.1%. Whether I think this is again the peak of the interest rate cycle, and also I'm going to be giving three stocks in this video, three stocks that I think could be doing really well from now towards the next 12 months, and I'm also going to explain why. So let's have a look. Just a reminder, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we use our strategy to chase 20 to 40% within a 1 to 3 month lead time. I'd like to thank you everyone that has been part of our community, buy and grow sales strategy for share traders. Our community now is about 4,000 people. That is fantastic growth that we have seen over the last 3 years. I'm also going to let you know that tomorrow, most likely tomorrow, I'll be actually going through all the stocks that that you have chosen for us here in our community. There's a huge list here, 24. There's a lot of stocks here. All of those stocks are supposed to be trading at what we call technically discounted prices. That if you have been following us, if you use a BGS20 strategy, you know that we normally only trade stocks that are trading according to our strategy at technically discounted prices, and those are our members already using our strategy to find out what are the stocks. And then normally, obviously, we pick up the best ones, the ones that we see some good value, low risk companies that are trading at obviously some degrees of revenue and potentially improving its net loss, or even becoming profitable if not profitable. So all those we select, we pick very carefully, and potentially some of those stocks we even trade ourselves here if they have fantastic or good fundamentals that are appropriate for that particular time. So now interest rates was kept on hold, which is good. Again, I said in the last video that I don't think RBA or Philip Lowe will ever come and say that in public that now interest rates are at peak or it's end of multiple interest rate hikes. That's never going to happen. Again, like this is a strategic move that needs to be made by the RBA in order to obviously contain inflation, fight against inflation. But the truth is, normally when those massive interest rates hikes happen, and normally at the peak of interest rates, there is a big lag, big delay in between the impact. In between the last interest rates hike, the peak, and the overall impact in the economy. So, and what we're looking now is we're looking at the fact that those interest rates hikes are now taking effect, but probably the major concern here is what is going to be the peak of this so-called impact. And then we could see still another 6 months, and then at the end of the 6 months, then that's when we have the true impact on the economy. So we probably will see inflation coming down further, and then the things still degrading further until the end of the year, and then potentially net when you have most of the mortgage holders coming out from the fixed rates to variable rates, and then obviously passing further increase to rentals. And again, so in the media yesterday, and I completely agree, the people who are actually taking most of the impact of these multiple interest rates hike, the cost of living crisis, the young families, and they are receiving multiple rent increase during the last 12 months, and then they probably will get more rent increases. So then rental prices should increase further. So RBA should be looking at those figures and understanding the impact from interest rates hike here in Australia is way more sensitive than it is in US, because most of the mortgages are actually directly tied to interest rates, where in US they have the whole mortgage life in a fixed term, so they know exactly what they're going to be paying for the rest of the mortgage. And here it's a variable. Most of the time it's variable. We can only lock in for 2, 3, or maybe 5 years, depending on the lender. So very important there. Now that we have seen interest rates on hold once again, let's explore three stocks that we believe here at BG Trading has a very good chance of start going up. And one of them is ZIP. ASX code is ZIP. Again, you might gonna laugh, you might going to make some few jokes about this particular company, but again, you know, in this channel that we have been trading ZIP in the past, in 2021 and 2022, and ZIP has been incredibly profitable. Now the market hates because a lot of people lost a lot of money. A lot of people lost a lot of money, and a lot of people are hoping the stock will come back to $10 or $12 or even $14, which was at the peak. Now, for us here at BG Trading, we normally trade for 20 to 40% profit only, and normally are the stocks that we trade in companies that are improving its business in the overall macroeconomic context. But mostly important, what we're looking here is the macroeconomic cycle. And if you go through this, I want to quickly show you that the economy normally trend in phases, and the phases of the economy that we are now is in contraction. We are contracting. RBA and central banks around the world are trying to contract inflation, and normally during this contraction phase, we see healthcare stocks going up, consumer staple stocks going up, utility stocks going up as well, but most of the other stocks like information technology, communication, consumer discretionary, finance, energy, and materials going down. But now we gotta think about this. If we are at the peak of the interest rates and we're looking at the second half of 2024 to be the half that interest rates could start be cut by the RBA in order to stimulate the economy again. And that's what the market is looking at now. If not yet, we'll start very, very soon looking to that. And that we call recovery phase. That's a recovery phase within potentially 1 year from now. But the key thing here is that the market normally prices within 12 to 18 months in advance. And that is something very, very critical. We have to be looking to what are the stocks that tend to benefit from a recovery phase. And some of the stocks are industrials, real estate, but also information technology, finance, communication, and consumer discretionary. Now, these are the sectors that will tend to benefit the most within 12 to 18 months, regardless if we go into recession, because by the time we go into recession, we'll have already media and RBA talking about potential rate cuts, will hit the economy again, essentially changing the scenario towards to a stimulating the economy rather than forcing a contraction. And that is the time that you would probably already miss the boat, because the market will have already priced that in. Remember, investors in the market look into 12 to 18 months in advance in order to price stocks that should be very carefully looked into those particular sectors that I have just mentioned in this video. We are normally tracking on a daily basis and a weekly basis and monthly basis here at the BG Trading. But Zip is one of those stocks that could be recovering really well. And when I'm talking about recovering really well, I'm not talking about 1000% recovery. I don't think that's gonna happen. But what I'm talking about is potentially doubling price, because it's only the stock is only worth 47 cents today, and we could see at $1. If we see Zip at $1 and we bought Zip at under 50 cents, we would be profiting 100% out of this potential rally. And that's what we did last year. We bought Zip under 50 cents and we sold around $1.10, and we made over 100% profit on Zip. We also did that with Tyro. Tyro is not a buy now pay later, is a financial banking license company, and that also has been profitable. But concentrating in Zip, I have a full video about Zip in this channel. I'm going to be putting right here for you. So essentially, the company is looking. The company goal is to achieve profitability by 2024. We've seen a lot of good things coming out of the business model now that has been obviously restructured. The company stopped spending, stopped cash burning, or have a dramatic reduced the cash burning rate from what it was last year when I was trying to even acquire Sizzle, which is another buy now pay later. Looking to the numbers, the latest number for Q4, which has just been recently released. So then obviously we have total volume transactions still increasing despite this very tight macroeconomic environment. So then cash, this is what I wanted to show you. Cash transaction margin for the core business has still improved from 2.8% to 3.1%. Obviously, the margin is really low, but it's a lot better. And you ask yourself, okay, how can they still improve in margin with high interest rates? Or they just doing? I don't know why they probably, I don't use Zip myself, but I believe they are just increasing customer face and then still increasing number of transaction, customer fees, and obviously compromising a little bit the volume, but going through much better quality businesses like travel businesses that Zip hasn't been in FY22, and many other really good quality businesses as well. We can see here Jetstar, we can see also Qantas. So then obviously taking advantage of sectors that are actually growing as well, and high ticket sectors as well. So it's very interesting. I am still expecting a around $400 million loss for FY23, but comparing to what happened in FY22, $1.1 billion loss, $400 million loss will be less than half, and that shows a dramatic improvement. Also, looking at the revenue for FY23, we also estimate full year revenue for FY23 to be around $726.9 million. And if that is, obviously, it will be a big jump and dramatic reduction of the net loss. So positive. Now, the other stock that I wanted to share with you is POLYNOVO. Once again, this is actually a better quality company than Zip at this stage. And when talking about better quality company, is a biotech company that has three main products and has been growing really, really well. Look at this growth pace, very consistent. Look also the net loss, very consistent net loss. This financial year, the company will grow its sales even more, but also, and that's the fact has been reflected into the share price, but also going to be increasing its net loss. I believe the market has already priced that in, and as a growth stock, POLYNOVO should benefit from this shift on that the market may be pricing in the economy cycle that we will see down the track next year. And the last stock, this is a little bit more speculative because we haven't actually had any result right now on our hand. The last stock is APPEN. APPEN is into AI segment of the market. There's a lot of hype on AI, but we're not only looking APPEN for the reasons of the potential AI hype, but we look into APPEN major clients here: Microsoft, Amazon, LinkedIn, also Pinterest, Google, Oracle, all companies that should be using and implementing more and more AI into their overall businesses. It's most likely that those companies will still require some sort of service from Apple regarding machine learning and data entry in order to feed AI modeling within their own businesses. So technology companies, obviously Apple has automotive companies as well as a client, healthcare companies, and financial companies, all potential clients that will need to incorporate AI into their business model. And also, when Apple released its last year result, Apple has informed the market that the second half of FY23, or this second half that the company is about to report, potentially with the market update tomorrow and a full year report by the end of the month, we should have a dramatic improvement from the first half to the second half, and that could show investors a potential turnaround. It has been downgraded over the last 18 months, but we could see a potential turnaround as AI more and more emerge into everyday businesses. So I'm not going to go into details on the chart formation, but I can tell you this. All those three companies are trading at what we call buying area according to BG trading strategy. Obviously, the most expensive at the moment shows to be POLYNOVO, which is a technically fair price, but Zip and Appen are trading at technically discounted price, and I really encourage you to take a look in detail, not just the chart formation, but remember the fundamental details, especially if Appen and Zip has an upgrade confirmation with their full year reports. So hope this video was valuable. I also like to invite you to go in our email list if you want to have access to regular content on a weekly basis and some regular market updates as well. And let us know what you think about those stocks. And I will see you in the next video. Have a fantastic evening. Bye.